As I've urged with you, patience is required. These things don't come instantaneously, but when they come, they can be life-changing. You see, we're at that point in the 4-year cycle, just ahead of the US election, where things get very exciting. And often around the halving period, there is a pause. It's often global liquidity has paused, which has happened recently. But on a forward-looking basis, as I've explained to you in other videos, liquidity is about to surge.
Raoul Pal, as you heard, believes this is the time to buy as much as you can with your cash, as we are right on the verge of US elections, which will eventually result into printing a lot of money, which will mean a liquidity booster for global markets. On the other hand, XRP has recently been in the spotlight after winning a significant legal battle against the SEC. XRP, if you know, has been one of the rare crypto to stick into top 10 cryptocurrencies since 2017, and the case is getting stronger every day. The legal victory of XRP against SEC has been a game-changer for XRP, providing a much-needed boost in confidence among investors. The case's resolution has removed a significant cloud of uncertainty that was hanging over XRP, allowing it to regain its footing in the market. This win not only solidifies XRP's position, but also sets a precedent for other cryptocurrencies facing regulatory challenges. Talking about technical aspects, despite recent price swings, XRP is showing bullish potential. One of the key indicators is its steady moving averages. XRP is currently circling around the 50-day, 100-day, and 200-day moving averages. This stability is crucial, as it indicates that XRP is not experiencing a sharp sell-off or significant loss in trading volume. The presence of buyers in the market and the lack of downward pressure suggest promising medium-term prospects for XRP. Another bullish sign is the consistent trading volume. Even though XRP has faced challenges in breaking above the $0.60 resistance, the trading volume has remained stable. This indicates ongoing interest and involvement from traders, suggesting underlying market strength. A steady volume is essential in preventing severe drops and could signal future upward trends if positive factors align. Now let's listen to Raoul Pal again about what he thinks about XRP and overall crypto market.
Yeah, when you invest in the crypto asset class, you expect volatility. If I go back over all the years I've invested, most years you get 2, 3, or even 4 30% drawdowns. This one in Bitcoin has been 27%. It's kind of within the range of normality. And what you need to ask yourself is the main drivers of crypto are the business cycle, i.e. where are we with the economy? Well, we're starting to pick up slowly, inflation's coming down, rates are going to come down, liquidity is going to come in, and so therefore that's usually a very good time for crypto. So the tailwind is behind you. And the other thing, are people adopting the technology? Are things being built on it? And that's ongoing too. So when you see a news event like the last few days, driven by macro factors, you tend to think they're likely to be short term. Now, if the business cycle was getting old and the economy was starting to feel a bit more fragile, then yes, you might be worried about it. But this is early in the cycle, and generally you have to expect the volatility. And how I've always dealt with it is a Jedi mind trick, which is you look forward to it. When it happens, you can buy more, and you get to compound your returns much better than anybody else who just does nothing or tries to trade around it. So you should be thinking of these sell-offs as a gift, is, oh wow, if I can find a bit more cash, I can put it into the market, and you tend to do really well over the cycle by doing that strategy. Every 4 years, in fact, that we've come close to something that could be nastier, they've started printing money. And it's not just the US, it's everybody, all the main central banks. And that has kept a bottom under markets. Even in 2022 was a bit trickier because we had inflation. So it was hard to print money. But eventually when it got to it, when the S&P was down about 30%, they kind of went enough's enough. And they started printing money again. So I don't think there is a lot to fear. In fact, I would be so outrageous to claim the probability of a down 50% market is now miles smaller than it was when you and I grew up, when it was a common occurrence that we would see it. We won't see this again because of the money printer.
Okay.
Doesn't mean it's a risk-free world, obviously, because when they print money, they're debasing your savings by 8% a year to start with. But if you think of that 8% cost of that debasement, that's like the central bank's buying a put option on the whole system, and it's costing you 8% premium a year. Put it that way, it's not the worst thing in the world. Inflation itself is driven by a lot of lagging factors, and housing is the big lagging factor, and wages, both of which are coming down. So we should see inflation much lower. Now, if I look at something called inflation break-evens, that's Wall Street's guess of where inflation will be in 1 year's time. If I look at it now on my Bloomberg screen, it's at 0.63%. So they're pricing in a massive undershoot of inflation. So it's telling us that rates should come down significantly. Right now, they're probably 100, 150 basis points too tight. And I think they should come down to probably around 2%, which is also very convenient because this year, the US Treasury has to roll $10 trillion of debts. And it's very expensive to roll it at 5.5%. It's a lot easier to do at 2%. So, I think it's a blessing, and the Fed will want to get rates as far down as possible for the next kind of 12 months when they have to roll all of this debt. I actually think it's a bit of a red herring because the US dollar is the world's reserve currency. The US doesn't need to hold other assets in reserve. Yes, it's got gold, but that was a legacy from leaving the gold standard. Other countries have to have reserves to support their own currencies, so they don't need it. Now, would they do it? I think it sounds flashy. For what reason, I don't really know. But let's assume that they do. Let's say I'm wrong and they do build something. It's kind of a weird world because, yes, obviously it's good for the crypto market because there's yet another buyer. But it's also weird because Bitcoin was set up to try and replace the government's control over money. And now you're inserting the government as one of the largest buyers of private money. I don't really like that, actually, but it's probably net positive for the crypto price. Now, maybe it pushes private use of money away from Bitcoin if that were the case. Because if the government can manipulate it, they can dump it onto the market, they can buy more, and before you know it, they're using it like they are interest rates and controlling regular money, and we don't want that. If your rate goes from 10 basis points to 25 basis points or whatever, right? What it actually was the move in the yen, because you have to pay back. You're borrowing yen. When the yen starts moving a lot, then that starts concerning you. The yen went up a lot, so suddenly the amount of yen you've borrowed has gone up in dollar terms. So what happens is everybody reduces risk, and that was the real thing. Is the Bank of Japan started intervening in the currency market because their currency was too weak, and they started selling dollars and buying their own currency. That's what everybody borrowing yen went, oh my god! Now suddenly, yes, I'm getting a cheap pickup in borrow, but bloody dollar yen is moving 2% a day every single day, and I'm losing a lot of money. And what happens is a risk manager comes along at a bank or a hedge fund and goes, you need to close your positions or reduce your risk. And that's really what the last 4 days were all about, was the risk manager tapping somebody on the shoulder saying, listen, you're losing money on this side, you need to start reducing risk. And that's why everything gets hit, from crypto to NASDAQ to mining stocks to oil to anything, any risk at all. But these tend to be very short-lived because, once the market resettles, they get used to the change, people have been washed out of positions, it then kind of settles back to normalcy. And these, I call them macro spasms, they don't usually last very long. Could it last a week? Could it last 2 or 3? That's possible. 2016 saw very similar. The dollar had been very high. The world economy was super slow. World trade had slowed down because the dollar was so strong. And the Japanese came in and intervened in their currency. All the markets blew up. Exactly the same mechanism. But what happened after that was the central bank started stimulating, particularly the Chinese, because they've been waiting for this moment to do so. The Europeans last time around and the UK last time around. This time, I think it's going to be the Chinese who are going to stimulate. And why they get to stimulate is they couldn't do much cutting of interest rates or stimulating of monetary policy because their currency was too weak and they didn't want to lose control of it. But now the dollar has weakened, they're able to do more. So I think really it's probably a net positive Just give it a few weeks and it's probably very positive.
So that was all about Raoul Pal's prediction on the global crypto market. He is very bullish and believes everything will pump sooner or later. And that's all for today. If you enjoyed this video, please give it a like, subscribe to our channel, and hit the notification bell so you don't miss any future updates. Thanks for watching, and stay tuned for more.